Ladies and gentlemen, welcome back to the channel. Today, Tesla stock had a really good day, considering the numbers for earnings yesterday were not that good. And in fact, they were pretty bad across the board. It was a pretty large miss across the board. Now, it does seem like with the move higher today in Tesla stock, what it really highlights is Wall Street is starting to understand that Tesla is an AI stock. That the earnings today, to a certain extent, do not matter because the earnings, figuratively speaking, tomorrow are so monstrous. Longer term, Tesla is going to be a beast. Okay. It seems like Wall Street finally is starting to understand that. And I do think that creates a shift potential for Tesla, right? For more of Wall Street to get involved with Tesla. As Wall Street realizes it's not about this quarter or about next quarter's EPS or auto gross margins or this or that financial metric, it does open the door for Tesla stock to move higher. You know, the stocks that can do the best during a bull market are the stocks where they're expected to grow a lot in the future. They may not be doing much today, but they're expected to grow a lot in the future. Okay. A lot of those stocks can do exceptionally well, and there's a ton of them out on our markets today. So I do see a shift in real time that is happening with Tesla. Now, here in this video, I will go over the economic data coming out tomorrow morning and how that could also impact our markets in Tesla. Let me tell you right now, before we even get into what Wall Street is expecting for the data tomorrow, if the data comes in good, if we see positive core PCE tomorrow that is not showing inflation is accelerating, Tesla stock could move big. Tesla stock could really explode to the upside. And not just Tesla, but small caps would likely continue the rally. And, economically sensitive areas may actually start to outperform as well. As I noted before, the RSP today is really outperforming. The RSP is up 1.2%, breaking out almost now to a 2-month high. That's impressive. And it's a good sign heading into tomorrow. So that's what we will discuss here in this video. I do want to play you the clip from CNBC today that kind of explains what I just talked about with Tesla. A lot of folks on Wall Street are starting to realize Tesla's not really a car company. It's an AI company. And that's one reason why I do think even in the near term, there is reason to be very bullish in Tesla stock.
At Tesla, but let's focus on these numbers at first. Miss on revenue, miss on EPS, miss even on margin. That's something that Tesla really touts as having great auto margins. It seems like the stock's moving higher on this idea of full self-driving in Austin by June and California and other regions by the end of the year. Did you see something else in this report that would make the stock move higher?
No, you pretty much hit on it. And even that clip we just heard from Elon, he played the hits. And I think what the bulls are the bullish narrative right now for Tesla is that it's just a diversified play on AI and robotics. And it's sort of that simple. So he highlighted full self-driving, Optimus, also how AI is going to play a big part in the company moving forward. And numbers are just being tossed to the side and just more evidence that the stock does trade more on hype versus fundamentals. Because as you said, auto margins, ex credits, I think they were the lowest since 2018. And so we'll see. That's what Musk's plan was, saddling up next to Trump. And let's pull out of the red tape and see what Tesla can do in terms of the FSD and rolling it out to different cities. And hence why you're also seeing negative kind of ripple effect for Uber and Lyft this morning as well.
All right,
I would even push back on that a little bit, that it's not just about sentiment that drives Tesla. Yes, sentiment is a big factor for Tesla. It's really a big factor for any stock, always. Right? Positive or negative sentiment really drives price action until earnings. And, obviously that's what determines the whether stock's going to go higher or not is really earnings. But it's not just sentiment that's driving Tesla stock higher. It's the expectation of these large growth opportunities. And the fact that Tesla whiffed it on numbers so bad last night and was in the green by quite a large margin today shows me that the party is just getting started with Tesla. Imagine when Tesla earnings recover. Imagine what happens to Tesla stock then when the fundamentals start to match up with the growth opportunity that we have. Or perhaps inflation comes in lower. Let's say inflation is no longer an issue by midpoint this year, that we're all kind of throwing in the white towel, the flags, if you will, and declaring victory on inflation, which I think could happen by mid-year this year. The Fed starts to reduce rates, 10-year Treasury yields start to come down, affordability picks up for Teslas, and Tesla actually starts to excel again on its core, basic business right now, which is selling cars, let alone everything else that's going on that's positive. That I see as an upside catalyst at this point. If Tesla can miss earnings and still go up, like completely whiff earnings and still go up, I have to be bullish on that. And I do think if tomorrow morning's PCE data comes in better than expected, well, Tesla stock's going to be potentially a big beneficiary of that. Now, tomorrow morning, we are going to get core PCE month over month, expecting this to come in at 0.2%. But remember, it's not just a even 0.2%. It actually comes out at a decimal point, in which I will show you the estimates from major banks in just a moment. Some of those estimates are really good. And let me tell you, if some of those estimates are true and accurate, and that's the number we get, markets are going to rip higher. They're going to soar higher tomorrow morning. So I'll share that with you in just a moment. We also have personal income month over month expected at 0.4%. Last month's reading was 0.3%. That one's interesting because for a long time, investors wanted to see incomes rise to kind of try to keep pace with some of the inflation. That's good for the economy, considering 70% of the economy is consumers spending money. But at this point, 0.4% on a month over month basis is unsustainable with the Fed's 2% inflation target. That is, on a 12-month annualized basis, about 4.8% wage growth, which is, I don't think there's a calculation you can make that make sense to justify a Fed 2% inflation target. That's almost triple the Fed's 2% target. So that would be an issue, potentially, if it comes in on the high side tomorrow. Now, personal spending month over month is expected at positive 0.5%. Again, I think that's good. You want to see spending come in good. You don't want to see spending start to decline. Again, 70% of the economy or GDP is people spending money. And specifically what we've seen today with the GDP numbers that came in weaker than expected, I think the last thing you want to see is spending come in really bad. Then you're going to start questioning, how strong is this economy? Okay, that would be good for Fed rate cuts, but maybe not as good for the broader markets. Tomorrow morning, you will also get Chicago PMIs, last month at 36.9, expecting a number of 40. Okay, so that would be quite an improvement. And then Fed Bowman speaks at 8:30 in the morning as well tomorrow. I think we all want to see what specific Fed members say, because nobody descended yesterday. The Fed didn't provide a whole lot of clarity in their path ahead. They really just stuck with their data dependent thing. They don't know what's going to happen to tariffs. They will react when they have a reason to, but for now they're on hold. So not much actually changed. If Fed Bowman and other Fed officials, especially coming next week, kind of sound more hawkish, that's not going to be good. If they sound more dovish, obviously that's good. And perhaps PCE tomorrow morning is going to really, change sentiment from some of the Fed officials. We'll see, especially if some of these lower estimates are correct. So again, when you see the headlines in the morning, like 0.2% or 0.1%, you really have to look at what the number is. Now, I'll tell you right now, if you see 0.1%, that's good. But if you see 0.2% pop up on CNBC or wherever you get your data from, it could be good or it could be bad. Let me show you an example of this. If you come in line with the median forecast of 0.18%, you would get rounded up to 0.2%. But if you take a look at like a low 0.2, so the headline could still read 0.2, but you could actually come in at 0.15, 0.15. It would get rounded up to 0.2. But times that by 12 for an annualized run rate of 1.8%. Okay, you could also come in at 0.2%, but the decimal number is 0.24. Times that by 12, you're looking at a run rate of 2.88% PCE. There's a big difference. There's a 1% difference in just the small, change in the decimal point, right, over a 12-month basis. So not all 0.2s are created equal, and that's what I'll say there. Some low estimates on Wall Street, there's actually a bunch of them. Oxford Economics is the lowest at 0.12%. Keep in mind, last month for PCE, core PCE month over month, you were at 0.11%. So that would be a slight uptick, but that would be really good. I think markets would rally aggressively on that. Piper Sandler's at 0.13%. That would be a very good number as well. Capital Economics, 0.14%. PNB Paribas is 0.15%. Bank of America is 0.14%. So there's actually quite a few firms that expect the number will come in on the lower side tomorrow, including Jefferies at 0.15%, right? Morgan Stanley even 0.16%. All of these are lower than the market's current consensus. So I do think there's good chances that tomorrow morning's PCE is actually going to be good. It's actually going to come in good and be a positive for stocks. Now, obviously, if we come in on the high side, that's not going to be as good. Employ America's at 0.21%, TD Securities at 0.20%, Wells Fargo 0.21%, and Namura Bank at 0.21%. So some high estimates, but it does seem like things are kind of skewed to the low side, that people think the number could come in lower versus higher. Now, today in after hours, you do have earnings from Apple, Intel, Visa, KLA, CN, Atlassian, Baker Hughes, Decker Brands, United States Steel, and SkyWest. Tomorrow morning, you have Chevron, Exxon, AbbVie, Colgate, Phillips 66, and Charter. This morning, you had MasterCard and UPS. UPS was one of the bigger losers. The stock is now, hitting new multi-year lows on news that Amazon is slowing down their contract with USPS. Maybe they don't need as much, carrier help, right? I guess that's the idea, and that is hurting UPS. But anytime you see UPS, FedEx, any of those shipping companies fall, they're seen as bellwethers for the economy, and that's normally not a super great sign. Now, Apple's also going to be interesting because when you look at the day today, Microsoft is down 6%, and I think people like Microsoft more than they like Apple right now. At least Apple or Microsoft is growing a lot more than Apple, right? Their cloud division is on fire, even though it missed estimates marginally and the stock got punished. Azure continues to do well. Apple really hasn't grown in years, okay? So are investors going to like Apple? That's really hard to say, and we will find out momentarily. Now, good news is for markets today, we are breaking out to a relative high on the RSP, a level we have not been at since at least December 11th. So almost 2 months now, we have not been this high on the RSP. The RSP is the equal weight S&P. So there is signs of life coming into our markets. And in fact, even though like the NASDAQ on last account was slightly in the red today, you actually have about 80% of stocks, broadly speaking, in the green, with a big outperformance of the Russell. Russell 2000 is up 1.33% today. The Dow is up 0.61%, S&P up 0.5%, and the Dow is up 0.1%, kind of break even. Again, the VIX is down about 7%. Bond yields now down almost 3 basis points on the day today to 4.526%. And I do think tomorrow morning it's going to be the make it or break it moment for bond yields. If PCE comes in on the low side, we could break below 4.5%. A break below 4.5% would likely trigger some buying of the algorithms, some buying of small caps, and you could have a more risk on market again, which I think a lot of our portfolios would like that. With that being said, the increase in breadth today, you can see this in the CNN Fear and Greed Index. You're now at neutral for market breadth. Okay, the headline number is at 48, which is also neutral. Yesterday you were at 45, so a little bit of a recovery on the CNN Fear and Greed Index today. Market momentum is fear, stock price strength, extreme fear. Again, stock price breadth is neutral, put and call options greed, market volatility is neutral, safe haven demand is greed, and junk bond demand also in greed. Now, things are not great out there though. I will mind you, the percent of stocks trading above their 50-day moving average is at 52.32%. Basically half of stocks are trading above their 50-day moving average and half are trading below. That's not particularly a super fantastic number. Okay, could be a lot better. And well, I think that just means there's a lot more upside potential in this market at this point. You could get back to that 80% level. That's when you're overdone. That's when you're pretty vulnerable for corrections. And we still could see 30% of our markets break above their 50-day moving average before that happens. So I do think there is a long runway of potential upside here for our markets before you should be concerned about frothiness or generalized overstretched markets. Sure, is there areas of markets being overstretched? Sure, but as kind of a lump sum here, we're not even close to being overbought. Now, 3 weeks ago, the AI investor sentiment survey absolutely plummeted to multi-year lows at 25.4%. So 25.4% of investors were neutral or were bullish. The week after of January 22nd, that jumped to 43.4%. And last week, you jumped to 41.0%. Okay, neutral investors fell last week from 27.1% to 25.0%, and bearish investors climbed from 29.4% to 34.0%. So you did get more bearish in the last week. Neutral investors fell, and bullish investors also fell. So there's not a lot of people right now that are neutral. I think a lot of people have picked their side here. They're either bullish or they are bearish. And I do think tomorrow could cause a big reaction in markets, partly because of that. So let me know what you think about all of this information down below in the comments section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.